Hello and welcome to another Jazz After Dark, place where we just hang out and talk about, a little bit of everything actually. A lot of investment planning, retirement planning. We're well versed in the trading world. If you don't know me personally, my previous life was teaching Chinese investors, really high net worth Chinese investors, how to navigate the US markets. Over the past couple decades, Chinese investors have had more access to move their money into other countries. That wasn't always the case. And so a lot of them wanted to learn, how does the US market work, and how can I buy stock, and how do I use options, futures, and all of that. And that was my background, so I was hired to actually do that. So I would actually go, it would be about this time of night often when we would, no, they would be this time of night for them, I should have said, when we would do these classes and we would actually just, hey, let's trade the market right in front of them and everything. That was a blast. We had a translator. A lot of them could speak English, but we had a translator, and I made a lot of good friends doing that as well. So if you ever hear me talking about trading, like on the closing beat or anything investment related, that's one of our differentiators here, is that that's our background. So that's why we manage our own funds, unlike other advisors that just pick mutual funds or ETFs. Well, we don't have to. We can build our own ETFs. We call them free TFs, right? So they cost you nothing, and you get the tax advantage because you get to own what's inside of what would be called an ETF. They're not officially ETFs. To be completely transparent with you, you know what I'm drinking tonight? If you're not familiar with this, hey, grab a drink, come hang out with us. I actually came back. This is that Flaviar thing. We're not sponsored by them or anything. We don't have sponsors. We're not that cool. But I came back to what I had yesterday because I didn't finish it. I put it back and I was like, you know what, let me come back with a good mind. You know, what are we going to do here? It's the Kujiya Ryukyu. If you don't know, that's what I'm doing. Oh, you can't even see that. That's what I'm doing this week. We have a Japanese sort of sampling. They send you samples. You can try them out and you don't have to buy the whole bottle there. So I thought I'd give it another shot. And it's not bad. If I had to give it a score, I'd say like a 78 out of 100, 76. I'll go 78 on it, just if you guys are curious. I'm not a connoisseur by any means of Japanese whiskey, but this to me just really thick on the toffee flavor, just not my thing. So 78. What are you drinking tonight, huh? My favorites are behind me here. You can't see them. Anyways, let's get to the good stuff here. I want to talk about pairs trades. How often, I realize a lot of you that watch this are more on the retail side of trading and maybe dabbling a little bit, getting to know stuff. How often do you pick a stock and either buy it, hope it goes up, or if you're more advanced, you short it, hope it goes down? Have you ever wondered, like, why do I just do that? If you buy a stock, you have slightly better than a 50% chance of being correct. If you short a stock, you have slightly less than a 50% chance of being correct. Granted, we find moments in time where price has exceeded the average or is overbought, oversold, and there's all these definitions. But there's something called a pairs trade. And every now and then it comes up. It's not my favorite thing to do just because I tend to look, naturally just look at one thing at a time. But on the closing beat, I was pointing out that there was a wide divergence between two correlated products. And that's pretty much the definition of a pairs trade, is initially you find a wide spread or a divergence in price between two products or two stocks or two naturally correlated investments that normally just behave with each other. It's just normally they go up together, they go down together. I'll show you, just quit beating around the bush here. Here's what I've got. I don't know if it comes up. Yeah, I shared this on the closing beat. So in blue, I'm using just an ETF to replicate or to visualize the energy sector. So that's in blue. It has done really well. Now, this was shared previously, so this is not current data. I'll get to that in a second. But what I pointed out on the closing beat was, hey, look at this. what is normally a pretty correlated pair, meaning energy goes up with the orange line, it's just the price of crude oil. So we're focused on crude oil in this case. You can break it into, by the way, if you're curious, Brent oil also has the same spread, but if you're a little more advanced. So what we normally find is there's a correlation that's got to be over 90%. And there's a huge disconnect. Energy was moving higher still, while crude oil had basically flattened out. It hadn't really done anything. And so I pointed out, hey, there's a anomaly. That's not normal. That's not something you see. Is there something you can do with that? So on the closing beat, we went through some data to kind of show what happens when these spreads get wider and stuff, just so you could see specifically what, kind of happens. And what you would do here in terms of a pairs trade, what you would do here is you would say, I'm going to short one and I'm going to buy the other. And I'm going to go somewhere with this here in a second, but you naturally would pick. Now, instinctively, most of us would say the more overbought or extended or exuberant product, I will short and bet on that falling or taking a break. And the more discounted product, I would be a buyer of. So in this example, a pairs trade would be to short blue, buy orange, or short energy, buy crude oil. Now, there's a common problem that I see on the old interwebs there from people that think they know what a pairs trade is, but would be horribly misleading people by saying this. They usually leave it at that, and they say, you short one, you buy the other. No. Please don't do that. That's not going to work out in your favor if you just say, 100 shares of one, 100 shares of the other, or maybe a tenth of a contract or whatever. Let's pretend for the moment that you could actually use, you could use an ETF actually. You could use any of the oil ETFs. So I'm showing crude oil, but I don't mean to misspeak. You could use an oil ETF. The point being, you do not just buy 100 shares of one or the other. The key to the whole pairs trade thing is the same number of dollars needs to go into each product. So don't think of it as shares or contracts or anything like that. It's going to be, I'm going to put $10,000 into this, $10,000 into this. I'm going to short $10,000 worth of energy, or the XLE, and I'm going to buy $10,000 of oil futures contracts. Maybe you buy 2 contracts and you'd have to buy a little bit more of energy. If you're not familiar with futures contracts, then you would say, okay, maybe I'm going to use like the USO or something. Not my favorite idea, but you could do that. And the reason I say futures contracts, because crude oil futures contracts, depending on the size of your account, could be anywhere from $3,900 all the way up to now, I believe, about $5,700 per contract. So I'm just sort of meeting in the middle saying, one contract is $5,000, 2 contracts is $10,000. So we go back to this here for just a second. And don't hold me on that because every brokerage firm is a little bit different. But we say, I have the energy, the XLE, and I'd like to put $10,000 in there. How many shares can I buy with $10,000? Or if your platform allows it, you can do a dollar-based short. Again, I'm thinking of all the brokerage platforms when I'm saying this, but you get the point. You take $10,000 and you bet that XLE will go down. You take $10,000, however you want to do it, and or 20, or whatever your number is, as long as they're even numbers, and you bet that crude oil will go up. What's going to happen there? You could be wrong, and you will likely be wrong on one side. It's not going to look like that. I'm going to show you in a second. But one of them you want to fall, the other you want to bounce. So what happens? If they both go up, your dollar, your notional value of each product will go together. That's the goal anyways. So if, let's say, energy continues to go up, but you bet on it going down, you're going to lose on that one. But you'll be losing at, if they go together, at the same rate that you'll be earning over here on your long on crude oil, within, a margin of error. And so what you hope for in a pairs trade is that one reverts to the mean faster than the other, okay? So if we look at something like this, you don't mind losing on one side of the bet. However, as long as one of them reverts faster back to the original correlation that we're used to seeing, you're good to go. So this is what's actually happening right now. This is current pricing as of, it's a day old actually. So it's right about there. So we were over here. And so now your short position is rapidly working out in your favor. But down here, your crude oil long position, it looked like it was going to go and it was going to work out on both sides here. But at the moment, it's not. It doesn't mean it's a bad trade because you're making more on your short than you're losing on your long. So you gotta look at that. You say, well, I probably won't win on both, but I'll win on one more than I'll lose on the other, and I'll take that spread. That's what a pairs trade is. So the key to it is that you put the same dollar amount in each trade. It's easy to do with stocks. I probably chose a poor example tonight, but it's easy to do with stocks because you can easily figure out within a couple shares how much $10,000 could buy. Or if you're, betting more or less or whatever, you can quickly figure that out. You buy that many shares. You will not end up, I would say 9.99 times out of 10, there's just not going to be where you end up with the same amount of shares. There's a good chance you could find something that's correlated and okay, they're about the same price, but that's not normal. So if you find that you're about to place a short on one and a long on the other, and you're about to have the same amount of shares, you probably did something wrong. Now, one last thing I'll add to this is a pairs trade does not have to be a same industry type thing, but we don't have to use products from the same industry. It could be very normal for a stock in maybe the communication services sector to be correlated to a tech sector stock. You could find a pair that has to do something with, gold and gold miners, of course, that's an easy one. But you could find something where the company itself just participates in a specific industry that's just outside of what it does. Scotts Miracle-Gro was a good example for a while because Scotts Miracle-Gro got into the goofy side of things. I don't say the word so YouTube doesn't get mad at me, but the green stuff that's slowly becoming more legal in the States, right? So Scotts Miracle-Gro, that's not their primary business, but they got so heavy into that for a while that it was kind of correlated to those stocks, right? And less correlated to its specific ag industry, right? So it doesn't have to be the same thing. Any correlation that you notice, any correlation that you feel like you could set up a scan for, right? Show me any stocks that are correlated to any other stock by a factor of 90 or more, right? You could get really geeky with it. Anyways, that's all. That's all I wanted to share with you. The only reason I point this out is, of course, to make it a lesson, but also because we saw it as it was happening. And so instead of just looking back for and cherry picking some chart that looks like it's going to work, well, this is happening right now. So we saw it happening, shared it on the closing beat. Now we share it with you to say, okay, yeah, it's not the best pairs trade in the world, but that's a great example of how it should work. So now take that pair, and I'll follow up with it too. Let's take that and follow it forward. At what point would you be done with it? Could it be that the XLE falls so quickly, but oil just kind of meanders around, give or take 2 or 3%, and you say, wow, I rapidly made money on this, but my crude oil is not doing anything. Therefore, I've got, this spread, but it's one that's coming down to meet the other. Yes, absolutely. So you could definitely do that. And it looks like that's what's happening at the moment. Anyways, I hope you enjoy whatever you're drinking out there. Kujira Ryuku. Yeah, like I said, it's not bad. Somebody said you ought to give these things a rating or something. So I don't know how you want me to rate them, but if I had to, like out of 100, like a score at school or whatever, I would say it's a 78. And that pains me, right? I'm not a negative guy, so I don't want to be negative about it. It's just not my flavor. And you guys know that from last night. Yeah, that's all I got for you. You guys enjoy the rest of your evening, and thanks for chilling with me here tonight. I realize I gotta change the shirt, right? I'm supposed to be marketing here. You can't see what's going on. Anyways, I hope you learned something, and we'll see you on the next one. Enjoy the rest of your evening. Thanks for hanging out with us.